Hello everyone, and welcome back to Duane Explains, where education fuels wealth creation. I'm Duane Francis, Portfolio Manager with Capital Wealth Partners, Manitoba Private Client Inc. And today, we're diving into a topic that's crucial for both institutions and individual investors: tax minimization and how you make the most of your yearly tax returns. Why is tax minimization so important? Simply put, it allows you to keep more of your hard-earned money from your investments. Large institutions like pension funds and endowment funds have long recognized this. They use strategies such as investing in tax-exempt bonds, earning interests without paying taxes on it. They also carefully manage when to sell certain investments to reduce their tax liability. By doing so, institutions can maximize their returns and channel more funds into their operations and programs. For individuals, tax minimization is just as important. One of the most effective ways to minimize taxes is by using tax advantage accounts like RRSPs and TFSAs. With RRSPs, your investments grow tax-deferred, meaning you don't pay taxes until you withdraw the funds in retirement. This allows your money to have more time to grow and build up that retirement nest egg. TFSAs, or tax-free savings accounts, on the other hand, let your investments grow entirely tax-free, giving you more flexibility and reducing tax impact over time. When you do take it out, every dollar is tax-free. Another straightforward approach is called tax loss harvesting or tax loss selling. This involves selling an underperforming investment to offset gains from another highly performing investment, effectively lowering the taxes you owe on your profits. For example, if you made $10,000 in one investment and lost $3,000 in another, you can use that loss to offset the gains in that high-performing investment, giving you a taxable gain of $7,000. By minimizing taxes, both institutions and individuals can keep more of their returns, enabling their capital to grow faster and increasing their income over time. It's a simple but effective way to enhance your overall investment performance. Thanks for tuning into this week's Duane Explains, where education fuels wealth creation. Join us next time as we continue to explore wealth creation strategies. See you then.